G'day there. Welcome to the final closing bell of the year. Look, Merry Christmas, Happy New Year, and all of that, of course. Hope you have a great break. I hope you're not really watching the markets too closely. I've been warning you recently about the fact I thought markets were going to turn down again. Look, I think over the last year, I've got a pretty good record of showing you how things were evolving and what was coming. I really hope that's been a help to you, that you've learned a bit about how I approach things, and that one day you'll be a member of one of my services. I mean, that's why I do this. I don't do it just for fun. Today I'll just do a bit of an overview of where we're at, show you what can happen. Look, in this Christmas period, it can actually be more volatile than you think. Most of the time, it'll just die with no volume at all. Everyone goes off and enjoys their Christmas. But if things do start moving rapidly, they can move further than you think because there's no liquidity. And if everyone's trying to get out the door on the same side, and there's no one there really buying, all of a sudden it'll move just a lot further. And the technical setup is there for that sort of thing to happen. So last night, for me, it's Friday, for me recording this, we had the GDP numbers came out pretty strong. Now markets really waking up to the fact that rates are going to have to keep going up, and who knows how high really, and will have to be held there for a while to get this inflation under control. So there can be more downside going into next year, but it's going to be an exciting year next year. I think we'll find some sort of low. I'd like to see another big wave to the downside, and then I'll certainly be stepping up. As you know, I sold out of a bunch of stuff last week before the FOMC meeting because of the setup. So let's have a look where things at and what we can expect over this Christmas break. So this is the NASDAQ for starters. I don't often show the NASDAQ, but I think today just gives you a sense of how weak it really is. NASDAQ down quite hard last night, and there's the low of the whole correction. And you can see it's a very clear, strong downtrend that the NASDAQ is in. And you'll see that the bear market rally that we had was pretty poor from the NASDAQ. So there's your last wave down. And really, it's only got back to about the midpoint, probably exactly the midpoint would be my guess. And you can see there's your weekly sell pivot coming in. So it does need to break below that low. It may not do that. Might manage to find a bit of buying pressure and sort of hold in there, which means it'll just be in a range and we won't see that next big wave down. But, if it does crack below there over this next week or two, I don't know what's going to happen. Look at the way Tesla's moving. It is really in free fall at the moment. So, there could be more downside to come on that tech space. If we, have a look at the run that it's had, there's your whole run from 2020, just a straight line. And, when it goes up in a straight line, there's often not that much support on the way down. So this could just do that. And that's the way it's looking at the moment. So, more to come on the downside in those tech stocks. And looking at the S&P, you'll remember from last week, we've been analyzing this, and I guess we don't know where it'll finish tonight. You know more than me. Is the weekly sell pivot confirmed? And, really it's a classic setup, isn't it, that we're seeing here. I'm showing you those waves and the expectation that the selling pressure should be up around that sell zone area. We've seen that. It's turned back below the point of control, the midpoint. So, next line of support for this is really down around that sort of 3,600 to 3,700 region. That's where it should get to. And it's whether it actually finds support there or not, I guess. There is a bit of support down there. And look, maybe in this Christmas period, it can't get through that. And it ends up just, selling off to that area and then finding support, and you're going nowhere. And by the time I talk with you in mid-Jan, it might be just around the same area. But if that support doesn't hold around this 3,600, 3,700 region, and it does actually crack below that low, I guess that's the one I'm worried about. It's still quite a while away for that S&P. We're at 3,800 in the S&P, and it needs to really sell off quite a long way just to get to the bottom there at what's that, 3,500. So that's 350 points away. That's a 10% sell-off in the S&P. So if it was there by the time I got back, I guess mid-Jan is a possibility, and that would be a pretty bad situation over Christmas, and it would certainly set up for a pretty chilling start to the year if it was to look like that. And the big picture I've been showing you, we've been looking at this, thinking about where it's going to end up going to, and you'll see that it's bounced off that point of control perfectly, the midpoint of the whole wave up since 2020. We're seeing resistance where we'd expect to see it in the big picture. So if I get rid of that, I'd expect to see lots of resistance in this zone. And we are seeing that. And the high just reached just before the FOMC meeting last week was bang on the bottom of that sell zone, and really got hit quite hard from there, and is back below the 10-week moving average and the 10-week below the 20-week simple. So we're in weekly downtrend as well as monthly downtrend. So it's really short, mid and long-term downtrend at the moment. So that's the scary sort of time where it can just sell off. And if that major level cracks, I mean, that's a story for next year, but this is when it can accelerate. And this leg can be quicker than the leg above, because you're still getting lots of buying pressure coming in around this area. And below there is where there's a bit of a panic usually. And, it could end up all the way down around there. Some value probably emerging down there next year. And would be starting to look for some sort of a bounce from there. And that might be it. Or if inflation is not under control and they really have to ramp it, it might even turn down and take out the lows of 2020. But that really is a story for next year, and the numbers that come out, and how things happen in Russia and etc. In Ukraine. So it's really sort of shaping up as expected. I've really been taking you through this all throughout this year. I was warning you about the sell-off all the way back here. I even told you about the bear market rallies. I then warned you here, told you about the bear market rally here, and I've been warning you through here. So pretty much I've been picking every twist and turn in this market at the moment. That doesn't usually carry on forever, but it certainly is sticking to the script as far as I've been showing you. So looking at the Australian market, and we've just been really looking up close at the way it's been developing, really thinking of this as a downtrend, even though it's retested the high, thinking of that lower and lower waves of selling. And if you were to do a linear regression of this, you'd be looking at it going something like that. So that's really what it's doing. And if we, look at the most recent wave, and I've been doing this even before the market turned down, and I want you to remember that. It's harder to predict these things before they happen. Everyone likes to jump on the bandwagon after the fact. But I was showing you this major wave, and we've got the buy and sell zones there traced out prior, knowing this is how markets move. And you can see the point of control there was good resistance. And then we just had a bit of bouncing around, fooling everyone basically into the buy zone. That's when everyone's getting short. Stop all those people out, go up into the selling pressure. And hopefully you'll remember when markets were actually rallying and on their highs, I said, this is the area where I thought prices would turn down. And look at what we're seeing here. It's been a perfect representation of what I look out for. Weekly sell pivot in place. You know, my line in the sand was around 7,000. I said, you know, below there, you got to watch out. And, you know, we are actually finding support around there initially. And, you know, you can see there the point of control of that, this wave comes in around that area. And also I've been showing you that ABC idea of how corrections get traced out. So you see, you know, an initial wave down, then you see an A, B, and C. Sorry, that's a big B. And there's your C leg. And then overlap at A is when I start to get worried. So that's why where it is now, it's sort of that decision time. And if this Christmas period, the US cracks, we are certainly set up in a very sort of serious technical situation where things could unravel a bit below that 7,000 region, and the selling pressure could really pick up. And of course, big picture next year below the low of the correction, around 6,300, is where we could have that really big wave to the downside. But then I'd be looking to start picking up especially quality companies out there. You know, I'll be looking in the top 200 for what I could find that was a good dividend payer. If it was to have a move like that, you know, something along the lines of down to there, yeah, I'm going to be very interested in starting to pick stocks up. So that's really how I see it. I think it's how I've seen it for a while, and it's all tracing out exactly as planned by the model. So I really do hope that has been of help to you. And look, let's see how it all pans out. But I hope you're prepared for it after I've been really warning you quite loudly recently about this possibly taking hold. So I hope you're prepared. I hope you've cashed up a bit so you can enjoy your Christmas break, relax with a few beers with your mates and your family. And I shall chat to you next January, sorry, and hopefully help you out following those markets next year. All right, cheers, Merry Christmas, and goodbye.